Hi, my name's Stacey Wood. I'm National Account Manager here at Market Harborough Building Society. Today I'll be joined by Chris Thompson, our Head of Sales, who also looks after Central London, and our Specialist Bridging BDM, William Edwards. We will be covering off a little bit more about who Market Harborough are, how you can get registered with us, a little bit about our Best for Broker promise, and also how we're your bridging building society. Who are Market Harborough? I used to be told that we are a best kept secret, but now we work with more clubs and networks and distribution partners, and I'm delighted that we've launched with Brilliant Mortgage Club as well. We no longer are that best kept secret. In fact, we have grown our mortgage book by 50% in the last 3 years, and we are becoming a trusted lender with our broker partners. In fact, we're receiving more 5-star FIFO reviews than ever before and have been awarded platinum status 2 years running. We are your bridging and complex case experts for any cases between 200k and 5 million that include multiple complexities. Due to the growth and working with more of our brokers, we felt it right that we also launch our Best for Brokers promise, which is our dedication and our commitment to you that we will always look to try and make things simpler for you to be able to place business with us here at Market Harborough Building Society. There are 5 promises, but one that I really want to pick out is yes means yes. This is our daily credit committee. It's chaired by either our CEO or our CFO and will be joined by senior members of our underwriting team. It gives the opportunity for your BDM to present your case because you will be using us because this case is complex. You won't be using us because we're top of sourcing. It will be because actually your customer has got complexities to their case. Once we've taken this case to credit committee and you've got your yes, it then makes the process simpler when you get to dip an application stage. You will also have that human touch. We have dedicated underwriters who will contact you once the case has been placed and they will support you all the way through to completion. Not only that, you will have 24/7 access to our case portal as well. Easy as 1, 2, 3. In true Best for Broker style, we have also simplified our registrations process. So as you will be a directly authorised broker registering via Brilliant Mortgage Club, there is no longer lengthy forms to complete or many documents to return to us. There is a simple online registration form with tick boxes. Once our registrations team have received that, they will look to get you on board within the same day. And then they will look to get you access to our case hub where you will have that 24/7 access to our online portal. It's likely that the cases that you're going to be placing with us are going to be complex, so we would want you to speak to your BDM before you place that case. The more stories you can tell us, the more cases we can take then to credit committee and share those stories and get those mortgages for your customers. So you'll need to have a great relationship with your BDM. In order to find out who your BDM is, we have now a handy BDM finder on the website. There is a QR link that will be on the screen. If you just follow that link in the website, type in the postcode and you'll find out who your dedicated BDM is. We have invested heavily in the BDM team. We now have 6 field BDMs and also a telephone BDM team and 2 bridging BDMs. I would urge you to use our website. There's lots of handy tools on there, and something I really want to draw attention to is our criteria guide. And remember, we're not a regional building society. We do lend in the whole of England and Wales. Thanks again, Chris, for joining us. This video for Brilliant is really to bring to life where our criteria fits. So I know that we tend to be used for multiple complexities, so complex income, complex properties, complex scenarios. But I know particularly in your space in London, a lot of that will involve large loans and high net worth. Can you just tell us a little bit more about our criteria?
Well, yes, Stacey. I mean, to be honest, everything we do is based in a niche area. A big area for us is unusual properties. So that's going to be properties made possibly with large acreage. We're looking to Airbnb outbuildings, annexes, etc. When you get into the towns, what you're looking at there is your townhouses with a self-contained basement flat. It's exactly the same thing. So if they've got multiple units on the same title, absolutely no problem at all. The client just needs to tell us what they want to do and we can come up with a solution. Another area is going to be expats. We do a lot of people living and working abroad. We can look at that on a residential or a buy-to-let basis. We do find that a lot of lenders don't like the idea of you having a residential mortgage on a property that you don't actually reside in because you're offshore. We've got absolutely no issue with that. We would look at it on standard affordability. Obviously, we do haircut their income, just to protect the client against currency fluctuation. But foreign incomes, living and working abroad, isn't going to be a barrier for us to lend. We can also look at complex income. So that'd be people with various income streams. That could be offshore, onshore, various different companies, limited companies, sole trader income. There's lots of different things we can take into account. As long as we can see it, we can use it.
I know high net worth, we look at assets in a different way. Can you explain us a little bit more about that?
We do. What we try and do is offer solutions to people that fall into that high net worth box. Now, for us, high net worth is the FCA definition, which is £3 million worth of assets or 300k of net income. And what you tend to find is these people tend to edge towards private banks, but from a broker perspective, that's not always the best option because they're losing control of that client. With us, we're using the same high net worth exemption that the private banks are using, but we're keeping the broker in control of their client, and it's still very much their client. They don't necessarily need to have income. If they've got assets, either onshore or offshore, provided they're liquid, we can use those assets to cover the loan over a set period of time at a given rate. So we're using exactly the same high net worth exemption as the private banks. We're just keeping the broker in control of the client.
So these are customers that you might not necessarily be able to place with mainstream, high street, but we can look at a different type of affordability for them.
Exactly, they would come outside of our standard affordability. We look at their background assets. They fall into a different category, and which is why they tend to sort of warm towards the private banks. And I think a lot of brokers think that the private bank customers have only got private bank options, where we're offering a solution to that.
Brilliant. And what age do we go up to for these?
So we've got on buy-to-let, we've got no operation limit. On residential, we'd be capped at age 85.
Fantastic. So one of the challenges brokers might face is around different types of affordability. Can you tell us a little bit about how we will look at affordability for various scenarios?
Yeah, I mean, outside of the high net worth, where we're taking them outside of our normal affordability model and using their assets, we also look at people that are coming into later life a lot of the time. So we're looking at up to age 85, as we mentioned, on residential. But we can also look at interest only. And we find a lot of these clients want interest only up to a later age. Now, any part of the loan that's based on an interest-only basis will be calculated on an interest-only basis. So what you tend to find is it will give them a bigger stretch. Now, provided they've got a plausible exit strategy, i.e. I am going to sell and downsize at some point, which we find the majority are going to do, then we haven't got any issue with that. So you could potentially look at interest-only mortgages up to age 85. And again, it's going to be based on the affordability on an interest-only basis, not on a repayment basis. But interest-only is a massive part of what we do because we've got people that have got different exit strategies. They're not necessarily looking for a 25-year repayment mortgage. They've got other options available to them and they want to utilise that.
Brilliant, thank you. And what LTV will we go up to on interest only?
Well, potentially we can go up to 75% on interest only. Our maximum LTV overall is 80%. But if you need to do a split, we can do 75% interest only with 5% on repayment.
Perfect, thank you. So we've also put on our website some client profiles which really sort of summarise the kind of customers that we see at Market Harborough Building Society. Outside of what we've already talked about, are there any other scenarios within affordability where we look at things slightly differently? Okay,
so the other area is joint borrower sole proprietor. So we're seeing that's becoming more and more valuable to brokers going forward in terms of affordability. Our joint borrower sole proprietor offering is slightly different to the rest of the market as far as I'm aware. So for example, we can put 4 people on the application, take all 4 incomes. They don't need to be related, provided they take separate legal advice. We can also use offshore income. So if one of the 4 is living and working abroad, paid in foreign currency, we can use that foreign income to support the loan. Also, if one of the clients is high net worth, we can use their background assets, again, to support the loan. We can also use it on buy-to-let, which is really unusual. Because we don't have an ICR on our buy-to-let, we work off overall affordability. So if that isn't quite working, then we can add somebody on as a joint borrower and use that other person's income to support that loan. So at the end of the day, you've got a property that's got a low yield, a client that can't evidence the income, but somebody that's prepared to go on the application who has got the income that we can use to support the loan. Brilliant. And that's quite unique as far as I'm aware.
So is there anything else that you think the guys at Brilliant would want to know?
Well, I think it's probably worth pointing out that we're very, very heavily intermediary led. We don't do any direct business. We're here to work with the broker. We're trying to build as many relationships with brokers as we possibly can. We've now introduced 0.3 on product transfers. That again works for high net worth customers. So whereas before, if it was going into a private bank, for example, you would lose that. You wouldn't get that. That client would go back into that private bank. with us, come back to us. If they stay with us, we get 0.3. If you want to rebroke it, you rebroke it. But the aim here is to work as closely with brokers as we possibly can.
Agreed. So thanks, Chris. That's everything from you. I think we'll hand over to Will now, and he can talk about how we're your bridging building society.
Thanks, Stacey. So I'm Will. I'm one of our bridging business development managers here at the Market Harborough Building Society. So our bridging proposition is focused predominantly on the regulated side of the market. So the two big pieces of criteria for us on our bridging is personal names and residential property, which is why we focus on the regulated side of the market. So here at Market Harborough, we have split off a dedicated team specially to look after our bridging products. So you have myself and my two colleagues handling the front end sales side, and we'll be your contacts throughout the initial process. We'll be there giving you your quotes, helping you through our DIP process and getting you through to application. Once you have an application with us, we have a dedicated underwriting team who focus purely on bridging, and they are our bridging specialists. And what they don't know, you don't need to know on the regulated side of bridging market. They will work with you to get your clients through the whole application process and get through to offer stage and then on to completion. So we offer 3 tiers of bridging products. We have our tier 1 products, tier 2, and then our bespoke products. Our tier 1 products are for your standard residential properties. So you're thinking your chain break type bridges here really. Standard residential properties, really easy to understand exit strategies, those that you can basically give us a bit of paper to show us. So refinance will fall under their sale of property. If they've got bonds or assets tied up in fixed periods, we can use those as the exit strategy. Our tier 2 stuff is then for your quirkier properties, more unusual exit strategies. So these will be your things like listed buildings in there, properties with large acreages, multiple units on the title, light refurbishment. That stuff will all fall under our tier 2 products. And then with the exit strategies, this is where you might be needing to use 2 or 3 different exit strategies to achieve the exit. Or you might have an exit strategy that's overseas. So we're more than happy to consider expats on our bridging products and overseas assets as the exit strategies. Most commonly that is sale of property abroad. So we've had clients who have properties in America or in Europe or wherever in the world they're selling those. They can show us ownership, they can show us value. We're happy to use that as the exit strategy. And anything else that's just that little bit more unusual, that bit harder to evidence, that's going to fall under our tier 2 products. We then have our bespoke products that capture everything else. So in that we include everything from sort of heavy refurbishment and building your garden, through to rebridges and raising for business purposes. Any of those sort of slightly quirky out of the ordinary scenarios will fall under our bespoke product. And these are priced based on the individual risks and merits of the case. So it might be that you've got a case with something slightly quirky that pushes it into our bespoke product criteria, but the whole range of the rest of the merits might push it back into our tier 1 products. So it doesn't necessarily mean a higher rate there, it just means they're priced bespokely on those individual risks and merits. Also in our bespoke criteria, we have our high net worth products. Now these are pretty unique, I believe, in the market, and so these are for applicants who reach this high net worth criteria. High net worth criteria being £3 million of net assets or 300,000 of net income. So these are really key points of criteria for us. There is no flexibility on that, but if they do meet that, we're able to offer regulated bridging loans with rolled up interest beyond a 12-month term. In theory, we will go up to 5 years rolled interest for the right client and the right circumstances. What we've found is lots of people prefer a 2-3 year term, especially if they've got one of these more unique, higher value properties that just have a bit of a thinner market to sell. So if you've got a high net worth applicant who wants that little bit of extra flexibility in time, then our high net worth proposition can be really attractive for them and just gives them that little bit of extra time. And so that in a nutshell is our bridging proposition there. Where we really like to focus on and where you'll probably find that you'll use us the most is either on our tier 1 products, where we are pretty quick, pretty fast. We'll use AVMs where we can to get those really through, or on those bridging cases where you need a little bit more flexibility, whether that is flexibility on the type of property. So as I said, in our tier 2 products, we are happy with any range of property. So listed buildings will fall under there, properties with acreages, all those sort of things we are happy to consider. Or you need flexibility on the exit because you have a more unique exit strategy that just needs a proper underwriter to have a look and understand and make sure they're working to get what's best for the client there. The third option is that high net worth proposition. That is a big unique selling point for us. They're obviously a smaller market of high net worth applicants there, but when you do get them, it is a real product that offers a great degree of flexibility there for them. And that, in a nutshell, is our bridging proposition. Any inquiries you've got, please feel free to come to me directly or drop us an email at bridging@mhbs.co.uk.
Thank you, Chris. Thank you, Will, for joining me today. Brilliant. We are really happy to have you on board. We hope that this video has been really useful. If you have any additional questions, please feel free to contact your BDM. You can contact me or you can contact our support telephone team.